Good afternoon. Today is February 24th. I'm Joe Terril, president of Terril & Company, independent wealth managers headquartered in St. Louis, Missouri. This is an update as the markets have turned extremely volatile up and down with the Russian invasion of the Ukraine. There is quite a bit of information that some analysts are talking about that we disagree with. We want to explain that, but before we do, let me back up just a second to say that for the last 6 months we've been talking about higher inflation and higher interest rates around the world, and the fact that central bankers, particularly here in the United States, the Federal Reserve Bank, needs to raise interest rates and begin to battle inflation. There's nothing about this invasion of the Ukraine by Russia that changes our mind on that. There are some analysts telling people this is going to cause Europe to go into a recession, it's going to cause the United States to go into a recession, and therefore inflation will come down and the prices of such things as aluminum, copper, gold, steel will all come crashing down. No, we disagree with that, and we do not see this event causing a recession around the world. We certainly hope that there can be some type of peaceful solution to this. It's a very serious matter, but we'll keep in our prayers the fact that there'll be minimal loss of life and that this can be resolved somehow. But while it's going on and while it continues to go on, the world economy is going to be strong and it's not going into recession. Therefore, we'll still see interest rates move higher. In the United States, ironically, as the Fed has outlined all this, for the time being, they're actually still easing by continuing to buy 10-year government bonds. Granted, they're buying less than what they were, but they're still buying bonds and basically injecting reserves into the economy, which is just making inflation worse. So we are still somewhat negative on stocks and bonds, very selective. We're holding our energy positions, we're holding our gold positions, we're holding fertilizers and the commodity positions, some of the cardboard box companies. We think these stocks will be okay, and certainly so far we're correct to that extent that as people with the high-flying technology NASDAQ stocks are getting their heads handed to them on a platter, the basic value companies generating plenty of cash, paying good dividends, buying back their own stock, these companies are doing okay, and they're going to continue to do okay over the next 12 to 18 months. With that said, under the events of today's world, we'll probably be back in a couple of weeks with another update. But these are our thoughts and these are our recommendations. Thank you for joining us this afternoon.